Alright, let's get started real quick. So this is going to be about 20 minutes. It's not going to be too long. Gonna wait for this to load in real quick. But basically I'll be going over some alerts from last week that I had. And I'm going to be talking about counter trend scalps this week instead of which kind of goes against what IC teaches. But a lot of times I'll do these really quick and easy counter trend scalps that don't end up hitting liquidity because it's going against a trend, but they do work very well. And I don't know why my trading view is not loading, but let me. Oh, there we go. Oh. So, okay, so this is right now. Wow, alright. So right now we're probably going to go fill this gap right here. This is a trade I'd like to point out. This is a really good trade that you could have just taken. I never took it, but because I wasn't on my computer at the time. But I have a couple buddies who just took this trade. So as you can see in this right here, we had a market structure shift. We had the gap right here. So we have this obvious gap right here. So because this is a kind of a 6 p.m. gap, that usually these fill pretty quickly. So again, right here, this is your entry. It's under discount. We have the market structure shift right here. So again, I would consider that the market structure shift. And boom, goes right into the fair value gap, right in discount. You enter, and your primary target is these equal highs right here. And stop rest at break even. You probably would have gotten stopped the rest at break even, but as you can see, we're pumping right here right now. So I fully expect this gap to be filled at the moment. So yeah, you have a nice hammer candle there. Yeah, I'm upset I missed that play, but it is what it is, you know. So I'm gonna be going to my alerts from last week real quick. And like I said, this is only going to be 20 minutes. If you haven't watched this video, by the way, this is I have this how to use the daily time frame to formulate bias. So I kind of talk about that a little bit. But yeah, so I'm just going to be explaining some of these counter trend scalps I did last week. So the first alert we will be going over is let's see. Alright, so right here, this was last Friday. By the way, if I'm lagging at all, just add me in chat. I'm recording, so hopefully I'm not, but just let me know. So, let me go back here real quick. So I said, gonna try this for a scalp, risky because non-farm payroll after, or obviously, and this was a pretty fast exit actually because I totally switched my bias in between this. So it was really hard to kind of alert that I switched my bias so quickly. So what I did was my original long was right here, and I got filled, right? And I ended up exiting in this bearish fair value gap. But why did I not hold for the whole time? Well, first of all, we have the 3 drive, so 1, 2, 3, so that's pretty bearish. Second of all, you can see that we retraced here after having a market structure shift right here. So this was telling me that there was shorts accumulating a short position rather than we just dump and then we bounce. So I could see there are shorts accumulating the retracements, so that made me more bearish. We had the market structure shift, and on this we formed this bearish fair value gap right here. So as soon as I saw that and this market structure shift, I sold very quickly for 4 points. I don't think I got the alert on time, but again, this is something that why you should learn ICT yourself, because if you saw this formulate in real time, you wouldn't have needed my alert to sell here. So I got a nice fill there, and I ended up exiting pretty quickly for 4 points. And at the time when I alerted this, it wasn't really a counter trend at the time. It wasn't a counter trend scalp at the time, but once you see this market structure shift and you see a retracement for shorts, you can kind of tell shorts are getting in for a bigger move. Then I will probably I'll like counter trend scalp my normal position. And for me, the way I tell that it's not a accumulation for a short move is usually if we just go right down without any retracements, then I expect this to be a bigger move. But because we retraced after having this market structure shift and then we dump from that, it kind of tells me that that's more of a kind of sell model. So that's why I got out so quickly. And right here, this is another trade I took. This was a pretty good trade. So again, I entered in this fair value gap right here. And at the time, I never drew the fib or the 50% retracement. And as you can see, it never went to the 50% retracement. But why is this still a good entry to enter here? Well, we never hit liquidity, okay? So because we were so close to hitting this low, but we reversed right before, this told me that we were going to hit this low. So that's why I bought in this fair value gap, and I kind of went with the momentum rather than waiting for it to go in premium. And this was kind of a sell model curve, and I knew we had to hit this low to complete it. So I ended up entering there, and I scaled here for 7 points, and I scaled again for another 15 points, as you guys can tell. So that was a nice trade, and this was a very quick trade. So I hate taking slower trades, but this was a quick trade, so this is my favorite kind of trade. We just go into the fair value cap, and then boom, we just reject it. So that was a nice trade. And then here's the other kind of counter trend scalp I had. So all day I was waiting for this level, and you can see it's 3769. So I'll kind of show it on the chart. So you can kind of see how we hit this liquidity up here. We hit this high. Well, that's a completion of a buy model. Okay, so we have this curve up. We complete the buy model, and then we have a nice wick up right here, very fast candle move up, and then a very fast candle move down. So that tells me that that's a liquidity grab rather than a market structure shift because of this fast red candle move down. And then what else do we have? We have this market structure shift right here, okay? So we have this fast move up, fast move down, market structure shift, retracing the fair value gap, and because I missed my first entry, I was looking for another entry, so I missed this entry, but I was looking for another entry, and the other entry we had was right here. But look, at the time we never got it, so I kind of kept that kind of a note on my screen that if we did get back up here, it'd probably be a nice counter trend scalp, especially if we already hit liquidity. So usually once we hit liquidity, I won't really look to retake these for like a full move, but I'll look to retake them for like a counter trend scalp move. So because of how clean this was and because it never offered the repricing at the time of the sell model, I knew that I could counter trend scalp it on the way back up, okay? And you can kind of see as soon as we hit this, boom, we have a nice 10-15 point rejection. And I said I got filled, I think 1 point off the top, and I said out here for 11 points. Why did I get out here? Well, we were in discount for longs because I knew this was a counter trend scalp because I knew we already hit liquidity right here, and I was bullish at this point. So you can see that if we draw this fib from this, longs would have been trying to go long under here, and even though there's no fair value gap, it's still more a counter trend scalp because we already hit sell side, okay? So there's really no reason to kind of hold this longer than it was. And I actually ended up entering this trade too. I entered long on this trade, and this was a 3-minute fair value gap. So I entered a discount on here. When we get this much of an under-direct move, the chances that we go back to this price and then dump are very rare because of how fast this move was. Usually there's a bunch of buy orders still sitting in here. So again, this is a really nice move, and I ended up selling right here. And I almost took this move again, but I didn't. But you can see this counter trend scalp. You can see how well this worked. Did we hit? Oh, we were so close to filling this gap. So, well, we basically filled it. But you can see how I counter trend scalped that. And although it's not like a play where you're gonna hold for 50 points, I find these work a lot, especially if it's this clean of a fair value gap. And there's a fair value gap above it, but I didn't like that because this was kind of cleaner. Usually I do wait for these fair value gaps right here, but this was kind of more of a textbook one that was it was in discount at the time, okay? So if you draw the fib at the time, the 50%, if it offered price up here at the time, then I would have gone short here instead of here because this was already in premium. So that's why I kind of took this one instead of waiting for up here, because the chances we were going to break through this and get up here were very slim in my opinion. And again, you don't have to enter right when we wake up there. You can wait for a rejection candle. So if you saw this rejection candle, boom, that's when you enter and your stop is over it. So that's kind of another, you can kind of wait for confirmation in that one too if you want. But again, that was a really nice counter trend scalp. And yeah, those are all my plays from Friday. I was actually up from other plays. I was up about 50 points on Friday. But if we go over some other counter trend scalps, you can see like this. Look at this fair value gap right here. We ended up bouncing off of it, and even though we were in the sell model at the time, because this curve, you can see if you kind of entered anywhere from 5.7 to 5.9, you got like a 8-point move still. And usually these counter trend scalps, my target is 5, so usually I'll scale most at 5 points, and then I'll have a stop loss at break even just in case it does go more. At the time, I thought we were gonna hit this fair value gap, and I was gonna try to enter there. But again, we never got to it, unfortunately. That would have been a really nice trade down here. And let's say we did hit this fair value gap at the time, and we got to move down. Well, then I wouldn't have not have re-entered over here, okay? Because this fair value gap, the orders would have been already filled already. So there's that. And this is another place I wanted to long, which I'm watching for tomorrow. You can see we have our break below these equal lows. Okay, so we go below equal lows, and then we have a nice market structure shift, and we only repriced into this fair value gap. We never went into the lower one, and I wanted this one. Why? Because it was in discount, but unfortunately we never got it. So again, this is another kind of counter trend scalp I'll look for if we do get to it, because by the time we do get to this, we're going to be so close to these lows and this low that it's probably just going to be more of a counter trend scalp. Why would you just bounce off this and go 50 million points, being how low it is? We can see I never got my entry here, so this is going to be another fair value gap I'm watching for kind of tomorrow. So I would definitely mark that on your screen if I were you. But I'm kind of showing you guys how you can still make money off these counter trend scalps even though they're not full 50-point moves hitting liquidity. And I know ICT doesn't really teach this, but these fair value gaps will still work. And even like on the bigger time frame, if you could have entered this fair value gap on the bigger time frame, knowing we were in discount in the bigger time frame as a whole. Okay, so like if you draw this from right here to right here, on the bigger time frame, we're still in discount as a whole. So you could have entered this fair value gap, being that it was didn't discount on the higher time frame, but maybe not the lower one. And again, if that, let's say you get stopped out, well then you can just re-enter in this fair value gap right here, because this is a very energetic and obvious market structure shift. So why would you not re-enter if we did hit down here versus if you entered up here? And this is also kind of a low resistance liquidity run, LRLR, which is the acronym which some of you might have seen. So it's kind of a trend line, as retail terms say, like retail traders say it. And you can see we get a nice break above, and again, it would have been nice if we came back down, tested this trend line somewhere in here, but that wasn't the case. The momentum was too strong. But you can see how many stop losses were above this trend line, because we had so many highs at the same place. So imagine how many people went short with stop losses above this trend line. So that's something you got to think about. And you can see there's 1, 2, 3, 4, 5, 6, 7, 8. Usually these trend lines I draw these trend lines off like 2 or 3 or 4 points. This is 8 different points, so that's going to be a lot of stop losses as well. You got to think about. So this is kind of another counter trend scalp I'm watching for. I would advise in not going for these counter trend scalps unless you can you're good at getting in and getting out instead of just kind of holding for 50 million points. Okay, so I really like these counter trend scalps, but again, I think the best case is just to wait for the models and see if you get an entry up here. But obviously you're not going to get those entries sometimes, as you can tell. The only entry we got in this sell side curve was right here. There's probably one right here on maybe the 30-second or 15-second, but this was very quick wick up. And other than that, we never really got any good ones. You can see we rejected this fair value gap, but at the time, you would not want to take this fair value gap because you already hit this low. And yes, you could have went for this low, but this is a longer term low I think we're gonna hit. But I think like this is kind of you can kind of see how major this wick is up, and when we got close to it, we got buyers. When we got close to it, buyers. And then once we created these equal lows, there's no point in trying to short below these equal lows, okay? At the time, maybe right here, I was bearish to this low, okay? Then I saw we bounced at this. So that's when I saw the equal lows, and I texted my buddy, I'm like, yo, I know we're targeting this low, but we just created equal lows, so there's no really point in holding back, so I would cover your position just in case we bounce from after going under these equal lows. So he ended up covering. It was a really great cover. But again, you got to react to what price does. So before these equal lows are here, I was expecting us to go down here, then I saw these equal lows, and then I switched my bias, because usually when we have equal lows this clean, usually we take liquidity and reverse off them. So yeah, you kind of just got to react to what price does in that situation. I look for these equal lows and equal highs a lot. I notice I'm being hit a lot on the smaller time frame, no matter what time frame I'm on, and the best ones line up to the cent. Okay, like these are relative equal highs right here, but again, they're not perfect, so I wouldn't really target those. But the ones that line up to the cent work a ton. Let me see if I can find an example. Like right here, this is a great target, but knowing that we have these equal lows right there, you just got to find a bridge to get there. So at the time, there's no bridge to get to these equal lows, but then we got this market structure shift, and then we got this retrace in this fair value gap, as you can see, and there's your bridge to get these equal lows, even if you're not confident we're hitting this. So again, these are lined up to the cent. Usually I like to look for ones matched up to the cent. I usually look for the wicks on the equal lows. But yeah, so I'm probably just going to end this here. There's not much else to talk about. I posted a lot of my trade recaps on my YouTube this week, so if you're interested in that, I would definitely recommend go checking that out. But yeah, we got another nice play here. Like we have this market structure shift here, and then boom, retracing the discount in this fair value gap, wick right in the discount, and then boom, we hit buy side here. That was another nice play. And the reason why you shouldn't kind of hold after hitting a buy side is just for this reason. You can see as soon as you hit buy side, well, boom, you're just retracing, go back down. So usually I'm fully out after we hit liquidity, depending on where it is. But yeah, that's all I got for now. Does anyone have any questions before I get off? Just let me know in free chat real quick if you do. I'll stay for like 30 seconds. If no one has a question, I'll kind of end there. I see KB is typing, so I'll just wait for your question. Yeah, so liquidity grabs, usually I look for equal lows and equal highs. And a lot of times liquidity grabs will have quick movements. So like in this situation, we have equal highs right here, okay? See how these are perfect to the cent? You can see this quick movement up, and then boom. See how fast this moves back down rather than just consolidating back down? This I would identify as a liquidity grab. And if you look at volume, usually liquidity grabs have volume spikes. So you can see at this point we have this volume spike compared to here. So before this, The only other volume spike we had was here, but there was no kind of lows or highs we went over. And right here you can see we had this volume spike right here, and then we had another volume spike on the way back down. So this tells me that this is a liquidity grab, and we're likely going for this low. And look, we have equal lows right here to the cent. So this was a perfect bridge kind of to get you to here and then sell. And we actually end up hitting this low right here. We never quite hit these equal lows. We actually made equal lows here, so I am bearish. But again, I'm not going to just short randomly. I'm going to wait until we get a market structure shift. So let's say we go down here, retrace above here, and then go down. But again, liquidity grabs, I like to look for equal highs, equal lows, and I like to look for a quick move up, and then I like to look for a quick move down off them, rather than if we got a quick move up here and it wasn't a volume spike, and then we kind of trickle down slowly, then I don't really consider that a liquidity grab. And a lot of times, and sometimes you might know it's not a liquidity grab until you get a market structure shift. So, like in this situation, I was unsure that this was a liquidity grab, but you can even see we get the volume spike here. See these volume spikes under these lows? That kind of tells me. But even if you aren't sure, you're gonna know this is a liquidity grab once we reverse market structure. So right here, we break above this last lower high. There's your market structure shift. Now you can it's safe to assume that this is a liquidity grab. So you're kind of expecting a bigger move off this market structure shift. So I would definitely look for the volume spikes. And the quick move down and up. And again, in this situation, quick move down, volume spike, and then boom, giant green candle back up. And if it wasn't that big of a candle, if it wasn't a bullish engulfing candle back up, then I would expect it to go down more. Like, look, right here, in live time, here's a low. But look, we get a huge move down, but there's no ever green candle coming back up, and there's no volume spike. Okay, so this wouldn't work because there's no green candle back up. But at the time, let's say we got this giant red candle, then we got a giant green bullish engulfing, and there's a volume spike, then I would have been bullish to go back up here. But obviously that was not the case. And even this, like, I wouldn't really consider this a liquidity grab right here because there's not really any huge obvious volume spikes. There's volume spikes all over, and there's not really a huge red candle and a huge green candle back up. So this is like, you wouldn't just enter here. This would probably be a liquidity grab. I wouldn't know it was a liquidity grab until we got way up here and I started seeing the buy model play out. But I like to look for those quick red candles and quick green candles, or the opposite. So quick green, quick red with a volume spike, and usually those represent liquidity grabs. And if you can see the 15 or 30 second, you will find these a lot in the 15 second, and a lot of times you reverse at the liquidity grab. So, and I definitely like looking for the equal highs and equal lows for these. So, yeah. Hopefully that answers your question. Is there anything else anyone has? Yes, and I also use the 15 second. Well, 15 second I use for liquidity grabs because the volume spikes show more of liquidity grab on the 15 second. But for ICT, yes, the 1, 3, and 5 minute, and the 2 minute. So sometimes if I'm in the 3 minute, like, I will not see a fair value gap in the 3 minute, but I'll see like a market structure shift. So let's say I'm like, oh, there's a market structure shift here, but there's no, let's say, pretend this wasn't a fair value gap. Well, then I'll go to the 1 minute. I'll be like, well, is there a fair value gap there in premium to retrace to? And actually, no, this is a perfect example. So, boom, we have a market structure shift. On the 1 minute, there's no fair value gap up here. See how there's no fair value gap? Well, then that's when I'll go to the 3 minute. I'll be like, is there a fair value gap on a different time frame? Because I know this is bearish because we have the market structure shift, but there's no fair value gap offering me an entry. But when we go to the 3 minute, well, look, there is a fair value gap offering me a re-entry, but we never got to it in this situation. And you can see, boom, as soon as you hit this fair value gap up here, huge rejection. And if you shorted here, 3783, it's like a 50-point move down if you sold it open today. So that's something I look for. And not every time frame will have these fair value gaps, so you got to go to the time frame to see if there is a fair value gap at different ones, because time frame is fractal. So when we get that market structure shift, it doesn't matter if there's not a fair value gap in the 3 minute, because there might be one in the 1 minute, which will still end up working. So, and for longer term trades, I do pay attention to like the 15 minute and 1 hour. Like as you can see, this is the 15 minute. At this point in time, right here, this is a giant 15-minute fair value gap with an order block above. And you can see we reject this perfectly. And at the time, I was like, I knew we were in a 15-minute fair value gap when I was in the 1 minute at this time. So that's why I was kind of looking for market structure shift down, which we ended up getting right here. So kind of be aware if we're in a bigger time frame fair value gap on like the bigger time frame. Even the 1 hour, this was a fair value gap as well. So right here. And then it was also a fair value gap in the 5 minute. It was a smaller one. So it was from here to here, and then we rejected it pretty quickly. So hopefully that answers your question. Is there anything else anyone has? Alright, well, I'll probably just end it there for now. Again, let me know if you have any questions in my Discord or here. But yeah, other than that, I'll upload this video on YouTube for the guys who didn't watch it. And have a great rest of the night. Be careful this week. It is elections week, so I'm going to be more patient and kind of looking for setups just for that reason. But yeah, good luck this week, and hope you guys make peace.